My mission is simple, to make you money. I'm here to level the playing field for all investors. There's always a bull market somewhere, and I promise to help you find it. Mad Money starts now. Hey, I'm Cramer. Welcome to Mad Money. Welcome to Cramerica. Let's be my friends. I'm just trying to make you some money. My job is not just to entertain, to educate, teach you, so call me 1-800-743-CBC. Tweet me at Jim Cramer. When I first got in this industry as a kid, I knew that what mattered was the business cycle. If business was too strong, the Fed might raise rates, cool things off. If business was too weak, you might have some rate cuts. You always have to pay attention to these things, right? Because you didn't want to fight the Fed. But today, with Dow gaining 71 points, S&P advancing 0.24% to a new all-time record, Nasdaq edging up 0.07%, I'm starting to think, wait a second. I'm starting to really wonder if the business cycle is becoming an outmoded term. Right now, we have multiple business cycles, and they aren't trading together in any sort of harmonious way. No wonder the Fed can't figure out what to do. Some businesses are going bonkers, others are going foul, still others seem to be falling apart. And that's why it feels so weird that the Nasdaq and the S&P 500 keep bumping up to new highs, and yet so much bad is happening underneath. So many of the stocks in these indices are simply not that hot, including even some of the Mag 7. But that could change on a dime. Same with a bunch of others. And heaven forbid if the president takes action, and he loves taking action, for better or worse, whole cycles can be torn asunder. Let me give you the rundown of the biggest bullish ones and the biggest bearish ones, so that you can figure out which ones are worth playing and which ones just may be too dangerous. First, the most insanely positive cycle out there is travel and leisure. This one's mostly a holdout from the days of COVID, when we discovered that we were long on money and short on time. I think the best of the bunch are all worth buying into weakness. The airlines are breathtaking. I've never seen anything like it. Old hands like me are used to seeing the airlines collapse once or twice a decade. Not anymore. You don't need to think this one through. You just need the obvious. You go buy United. It's up 10% year to date. I think it can challenge this old high of 116. Given that people seem to want to travel no matter what, we're well past the initial post-COVID boom here. I think it can absolutely justify paying 8 times earnings for United. When you travel, you need someplace to stay, don't you? There are 2 stocks that are roaring in this cycle, Marriott and Airbnb. They just reported excellent numbers. These were cyclical stocks before COVID. Now they're secular, meaning they seem to have growth no matter what. You need someplace to go, don't you? I keep hounding you to buy the stock of Disney. Buy. Because it's doing so well, yet all people seem to care about is that some weak link in the cable business that I think is going to pick up this quarter anyway. Theme parks, yes, they are expensive, but it doesn't seem to stop people from going to them. We go to a Disney cruise, or buy the stock of Royal Caribbean. Keeps beating the numbers and beating numbers and beating numbers. Again, the cruise lines haven't been cyclical since COVID. Need a way to pay? Need a way to book. Okay, that means buying Expedia, booking Holdings while using your American Express card. They have no quitting them. What's the opposite of the bullish travel and leisure cycle? How about the bearish housing cycle? Last night, Toll Brothers, one of my favorite home builders, reported a quarter that was mixed, and the stock just got hammered. The entire group took it down. Wow. Conference call was instructive because it showed there are cracks developing with lower average housing prices around the country, some very soft markets, something that's not supposed to happen when the Fed's cutting rates. Mortgage rates are still way too high for this group. I want you to listen to what CEO Doug Yearley on the conference call said. Quote, those areas where the buyers are a bit more hesitant, I think it's number one, those areas that have had more significant price appreciation through the COVID years than other areas. So instead of a 40 or 50% percentage price increase over the last 5 years, they're in markets where there have been a 60%, 70%, 80%, and 100% price increases. That includes Florida, primarily Austin, Texas. Those prices have to come down. That's raw inflation. Those have to come down before we beat inflation in this country. Toll Brothers created the entire industry. Everything from Lennar, D.R. Horton to Home Depot and Lowe's and everything they sell. And there's the banking cycle. Now that's in fuego. It's smoking. I mean, it's crazy. The lack of a Democratic regulatory headwind and the slower rate cut cycle, good for them. Wells Fargo, Goldman Sachs, J.P. Morgan screaming higher. Doesn't hurt that the whole industry seems very confident that the Trump regulators will be more bank-friendly than the Biden regulators. Well, no kidding. Who wouldn't be? On the other hand, you got groups like the transports. They're just getting clocked. At a conference call today, Norfolk Southern, one of the big East Coast railroads, traced out a soft picture. Union Pacific didn't seem all that exciting either. Coal's weak, chemicals horrible. Those are the ones that go into plastic. Plus, talk about being in the crosshairs of the tariffs. Do we want to own a rail that runs from Mexico to here, or a trucking company like J.B. Hunt, if we're getting into a tariff war with Mexico? To me, this group feels like it's practically in a recession cycle. Today, the food and beverage and drug stocks all got some lift. But you want confusion? These are supposed to be anti-cycle companies. They don't have a cycle. But now that we have a Health and Human Service secretary who dislikes processed food and vaccinations, so you may be thinking it's not so much of a cycle as it is an entire blight on these industries. In this administration, nothing would shock you, would it? What if RFK Jr. wakes up tomorrow and says, I'm banning Fruit Loops? Or stopping weight loss shots? I mean, everyone in this administration seems to think that the federal government can do whatever it wants. That's not how our system works. Or at least it's not how the Constitution says it works, but the blight's very much with us even with today's reprieve. Then there's the ag cycle. Deere stock can't stop. I think you just go buy the stock of AGCO tomorrow. Farm equipment maker comes on the show all the time. Pretty good. How about another unstoppable cycle, the aerospace cycle? Love GE Aerospace. We bought some Honeywell for the Charitable Trust, as you can find out if you tune into tomorrow's Club Call, noon. However, the aerospace cycle is so powerful. Get this. I'm going to say it. It's so powerful, you can maybe get closer. I'm not going to say too loud. You can even buy Boeing. All right, retail. Yeah, just the big three. Costco, TJX, Walmart. They report tomorrow. You stray from those, look out. Minefield. Use conflicting group of currents that make this economy almost impossible to understand. Sure, we know there are cycles in tech. Today, it's a bull market in the Internet of Things. Why? Because one of them, Analog Devices, said good things. We have a strong semiconductor capital equipment company. That's why I brought on KLA last night, Lam tonight. At the same time, we have a PC cycle from hell. We have a data center business that's been rocked by some outfit in China no one ever heard of. And we have a new product cycle from Apple itself that's both inexpensive and fabulous. I'm going to buy one tomorrow. But people are putting a real hate on enterprise software. Now think of Workday and Cramer, Uber, unbelievable, amazing fave service now. It's a horrendous cohort. Here's the bottom line. Can things stay this tenuous? Sadly, yes. I mean, today I shouted over to Jeff Marks, runs the Charitable Trust with me. We'll be on tomorrow's noon CNBC Investing Club call. I said, hey, man, how does the market look to you? I heard him say toppy. And I agreed. I said, oh, yeah, toppy. After the one we've had, he said, no, not toppy, choppy. And I said, oh, yeah, well, that's right. I mean, yeah, sure, it's real choppy. It's not toppy. And doesn't that level of conviction or lack thereof say it all right now? All right, I want to start with old friend David in New York. David.
Good evening, Mr. Jim. How are you?
I am good. How are you?
Good, good. I have a question about CELH. It has
it went up today. It went up today. This thing has been stuck. Remember Feely come on the show? This is that Celsius. Jeff loves Celsius. I looked at Celsius. It reminds me a lot of, I don't know, it's kind of like Celanese meets Dow and kind of like Eastern Chemicals, Eastman. But it's also drinkable. And it's going to report on Thursday, so let's see what happens. The shorts could be on the run in Celsius because everybody likes a good chemical in their drink. Let's go to Josh Brown, perhaps? Josh in Arizona. Josh.
Hey, Jim. Thanks for taking my call. New to the club. Thank you in
Excellent.
advance.
Thank you.
I took a note from Peter Lynch, and I went to the mall.
Okay.
I'm fairly new to stocks, and I came across ONON, OnCloud, Premium Shoe Apparel Company. I started doing research. I realized, my daughter wanted these for Christmas. I see all of her friends wearing them. I also noticed that a 65-year-old sports reporter was wearing them. I work in professional baseball for almost 30 years. I walked in and saw my equipment manager with their website on his computer. I said, is it OnCloud? He said, yeah, man, I was at Dick's.
And I think you're right. Now, Peter Lynch, what David is saying is basically the way you need to do. I'm sorry, it wasn't David, but it was it was Josh in Arizona. That this is what he's doing is really important, which is what he's basically saying is he saw it on many people, checked it out, and I think he's right. I think they're on a tear. I think they're still there. I see Nike maybe coming back, and I know that that New Balance is back. But I've got to tell you, I definitely think that we've had them on many times, and I think that Josh has done very good work, and he's right to pull the trigger. Tommy in New Jersey. Tommy.
Hey, Jimmy. Welcome back
from
vacation.
Oh, thank you, man. I needed a couple of days off. Thanks.
You can see you're refreshed.
I am.
This is Tommy from Lafayette, New Jersey.
All right.
And I have a two-part question. With Meta's latest sell-off, what's your thought on that?
Okay.
And as well, what's your thought on Meta splitting at this point?
Okay. I know Mark Zuckerberg likes these splits. I'll make you have a little sense on Meta. It went up so much that we actually did a little bit of trim for the trust because it got so huge for us, but not a lot because I tell you, it's still an expensive stock. And Mark, I know Mark's Mark, but I really, we own him. We have a lot of business cycles right now, and they're not trading together in any harmonious way. I think that makes it so that it's a little more tenuous. But if you like what you own, just stick with it. Mad Money tonight. First, some investor day announcements from Lam Research. What a stock. Sitting down with the CEO to hear if the semi stock can keep running. Then, how are higher egg prices affecting grocery companies like Spartan Nash with that 4.5% yield? Let's check them in the top risk. And later, one of my absolute favorites, Arista Networks, it fell today despite what I thought was a really terrific quarter. Let's talk it over with the CEO and stay with Cramer.
Don't miss a second of Mad Money. Follow @Jim Cramer on X. Have a question? Tweet Cramer. #MadMentions. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.